So my question is what's going on with gold? Why is it all over the place?
Well, obviously, a lot of people are trying to figure out what direction things are going to go in, and I'm not the only person saying that. When the Fed finally capitulates, to all the drivers of pushing interest rates down, finally throws in the towel and says, "Yeah, all that stuff we said about inflation, yeah, screw that. We're lowering rates." But that is going to be a catalyst, and we're going to see much higher gold price. I mean, I'm not talking $5,000. I'm talking 2,400 or something like that. Um, and everyone's trying to figure out is that what's going on right now? But then at the same time, the Fed reiterates, well, we're going to have higher for longer. Nobody knows what to believe. And, in the West, in America, in Canada, even in Europe, it's not like there's a currency crisis right now. There isn't. And people do not see, it's not like Turkey where the lira is always falling. It's not like, well, the Middle East is different. The currency is like, UAE dirham is, or the Bahraini dinar. They've been stable, they're pegged to the dollar and they've been stable flat for decades. They don't have a currency crisis there, but they have a different culture regarding gold. But in Turkey, where they have the gold culture and they have a falling currency, everybody is desperately buying gold as much as they can. Nobody wants to hold the lira. I mean, nobody outside Turkey would want to hold it anyway, and nobody in Turkey wants to hold it if they can dump it and buy gold. So somebody told me that everybody in Turkey, if they have any degree of wealth at all, or any degree of savings at all, would have at least 10 grams of gold, a third of an ounce. And that the average person would have a lot more than that. It's just, to me, that's incredible. As an American, you look around, I think less than 1% of Americans have any gold at all. And if they do, it would be, 2% of their portfolio, something like that. And, places like that, everybody has gold, and a much bigger percentage of the portfolio. It's almost, impossible to imagine. Anyways, so you have relentless buying in India, you have relentless buying in Turkey, relentless buying in the Middle East. Both Turkey and China and India having capital controls and other things that limit the import of gold. So, the price of gold in Shanghai breaking above the world market. That's not because, well, that's the right price or they're setting the price of gold or whatever. That's just because, arbitrage has been made illegal. You can't import gold to arbitrage away that gap because they've imposed a control. So anyway, so in the West, there's a bit of schizophrenia, people trying to figure out what to do. I will note that so monetary metals, we have all these graphs are on our website for free. We look at I call it the micro internals of the gold and silver market. And we publish something called the gold basis and co-basis, and same thing for silver. You can think of basis as a measure of the abundance of the commodity to the market, and the co-basis is a measure of the scarcity. What you normally see when the Fed makes some announcement, so let's say they say higher for longer, and then the price goes down, because people think, okay, tighter monetary conditions should mean lower inflation, should mean lower prices for the metals. The trading that happens, the moment, everyone is watching the Fed's statement, or watching for the Fed statement. The moment that statement hits, people hit the button on their screen to trade. That's generally people using leverage in the futures market. And so you'll see the price move, but you'll see the scarcity of the commodity moving in the opposite direction. So if the Fed says, maybe we'll cut rates and the price jumps, normally it's leveraged speculators buying, and the abundance of the metal actually goes up. At higher prices, more metals coming to market. And then if the Fed says something that's supposed to be bearish, then the speculators, go short, and the price goes down, but the metal becomes scarcer to the market. What's notable is that yesterday, the price of silver particularly shot up, and it became scarcer in the process. And the same thing with gold. And silver is always more volatile. So most of the time, what happens in gold happens in silver to a greater degree. And so the price of silver went up, and the scarcity of silver went up, which meant that it wasn't primarily the leveraged speculators using futures. It was actual stackers, actual people buying physical metal, which presumably goes off market for a much longer period of time. If you're playing with leverage in the futures, it's generally a short-term trade. There's a lot of pressures to close. If you're long, there's a cost in holding it. If you're short, obviously there's an incredible risk. You're going to wake up and the silver price is going to be plus 6%. You don't want to be holding a short position for very long. But if you're buying the metal and stacking it, those are often longer term, usually much longer term holdings. And so this particular move was driven by stackers, not leveraged speculators. And that's notable because that's an exception to, the normal pattern that you see.
What about Bitcoin as well? Bitcoin also jumped up quite a bit at the news too, and I've seen some of your tweets on Bitcoin lately as a as an inflation hedge, so to speak. The fact that you can't really self custody Bitcoin, because of its just risky nature, just being so susceptible to confiscation. Do you want to elaborate on that?
I mean, I can't really comment on its price action, and I try to avoid the trap of, there are people who think Bitcoin isn't money and isn't sound, and I certainly am in that camp. And most of them try to say, therefore, its price action is going to be downward, and gold is going to outperform because gold is better money. And I take exception to that because I don't think the price action and the moneyness or the soundness have anything to do with the price action. So is the price of Bitcoin going up at the moment? Yeah, obviously it is. And so I always like to leave my little quip. The price of Bitcoin could be a penny or $1 million or anywhere in between. It probably will be. But my comments about self-custody, probably all the key statements of the Bitcoiners are either just breathtakingly wrong or breathtakingly disingenuous. And they talk about self-custody, and that's easy. And so I had a debate, the Soho Forum, which is sponsored by the Reason Foundation, sponsored this debate, which was held at the Mises Institute headquarters in Auburn, Alabama, not this summer, but the previous summer. And I debated Pierre Rochard. And, we're talking about all the various Bitcoin topics and this idea that I spent, 2/3 of my talk talking about why it's not borrowable, why nobody would borrow something that's promised to go up 1,000 times. That would be suicide. And it's also not suitable for savings. And he was trying to say, yes, it is. And I said, okay, put yourself in the shoes of an octogenarian widow. This woman is 85 years old, no further income potential, and what's left of her life. Could you really say put 100% of your life savings into Bitcoin? He said, absolutely. And I said, well, we're sitting here right now, right after Bitcoin has just lost 75%. What advice would you have for this woman who's just lost 75% of her life savings in 6 months? And then, anyway, so this is kind of my closing remark. He stood up in his closing remark and said, I would tell her to buy more. I was kind of borderline breaking the rules because I'm not supposed to say anything. I'm just seated there on the stage, but I was kind of miming to the audience. I was like, and Gene Epstein, the moderator, is like, now, and what do I want to say? Buy more. First of all, you've already told her to go 100% all in. So the claims that they make are just, it's not savings, and certainly not saving for somebody who's an extreme example of saver, like an octogenarian widow. And the same thing with the self-custody. They say, well, self-custody, everyone should self-custody. Self-custody is easy. Why are they talking about self-custody? Because one by one, all the exchanges are turning out to be frauds. So you have to get your Bitcoin off exchange. I get that, but self-custody is easy. So today I quoted, one of these experts that was talking about, don't use these self-custody solutions. They're not going to work for you. Use this other one instead. And I said, self-custody is so easy that even, the industry experts, it's controversial amongst industry experts exactly how to do it. And just keep in mind that, in order for you to keep your life savings, not only can't you get hacked today, you can't get hacked tomorrow, you can't get hacked the day after, and every day between now and the next 30 years, you can't get hacked. Because if you ever got hacked on one of those days, the next time you log in, you're going to find out you've lost all your Bitcoin. And there's no recovery, and it's all anonymous, and it's gone, it's gone. This is not a vehicle suitable for mainstream people. So I think yesterday or the day before, somebody had posted something that Bitcoin had 0.18% adoption. I said, I wonder if that's faster than gas lighting went into homes 100 years ago. Is that a faster adoption curve than segways? Is that a faster adoption curve than anyways, they're disingenuous in their claims. It doesn't really work the way they say that it does. And it has all these little problems. And but the price is going up right now. Okay, great, it's going up. And when will it go down? I don't know. Something tells me if we get into real credit stress, you're going to see the price collapse. To who knows whatever level.
Do you know what the adoption curve to gold is?
I'm sorry, what?
Do you know what the adoption curve to gold is?
I don't, but I can tell you that billions of people around the planet own gold. It's just that
probably higher than 0.18%.
Yeah, it's let's call it 75%. Because if you look at the really populous regions of the world, which be Asia, South Asia like India, Pakistan, the Middle East, even in Germany, even in certain European countries, everybody would have some gold. It's just that unlike Bitcoin, they don't talk about it. In fact, it's the opposite. For thousands of years, gold's been the kind of thing you don't talk about it. And it's like when the patriarch of the family is on his deathbed, summon my eldest son, and he's like, we have gold under the stove, and then he passes away. And when I've told that story, that resonates with people. So I was in somebody's office in the gold industry a couple of years ago, relating that story. And there's a safe in the corner of the office, as there always is to anybody in the gold business. And I don't say anything. It's not appropriate for me to, what's in that safe, And I told him that story. He just busted out laughing. And he said, hey, you see that safe over there? I was like, yeah, of course. He said, there's a lot of gold in that safe. And he looks at me with his bifocals. I mean, a lot of gold. And he says, my kid don't know about that. He said, he doesn't need to know. He's chasing tail, drinking and partying and having fun. He's going to find out when his old man dies how much gold is in that safe. Okay. I gave a talk to a group here in Phoenix called the Phoenix Roadrunners. They're a gold prospecting group that goes up in their hills and they look for gold. And I know they find it because at the meeting that I was at, they gave away 3 little gold nuggets. Somebody was really helpful in doing something with the newsletter. Somebody else was really helpful in onboarding some new members. The third guy did something, to help the community. And they gave away 3 little gold nuggets. And so after that, it was my talk. And the first thing I said was, how many of you, raise your hand, how many of you own gold? Some amount of gold, any amount of gold. There's 300 people in the room. Not a single hand went up. Not even the 3 people that I just saw tuck the gold into their jacket pocket that just got awarded a little bit of gold. I mean, it was probably 5-10 grams. I don't know what the size of those nuggets were, but they all had gold sitting there on their person. Nobody raised their hand. And I was like, thanks for proving my point. You can't inventory this. The World Gold Council says there's 200,000 tons. There's no way to know. People have been hiding gold from their governments and from their nosy neighbors for 5,000 years. They don't talk about it. And there's not this giant community of people on Twitter trying to evangelize why everybody needs to own gold. It's not like Bitcoin, but billions of people around the world own it. And that makes the adoption curve 50, 60, 70%, 80% of those. They'll have it, and they'll want more.
Have you seen the video where Mark Dice goes around asking people whether they want a free gold coin or a free candy bar?
Yeah, I saw that.
Yeah, I was actually about to pull that up. Since you've seen it, there's no need to. But yeah, it just really highlights your point there. Like
that was some selective editing.
Yeah, but still, I mean,
the fact
that there's people out there though that would
choose
a candy bar over gold, though. Yeah,
they have no idea what the gold is worth. But it's also possible most people assume that was a scam, and that if he was going to give you a coin at all, that of course it wouldn't be real gold. It would be gold painted lead or whatever. It's like, well, I might as well candy bar, at least something useful.
Yeah, but I mean, I do believe there are people out there that will choose the candy bar over the gold coin.
That's right.
Like whether it's 100% real or not, like, but it's still,
Yeah, yeah.
it sends the right message. Um, I want to kind of take it. I want to take the conversation to the economy. There's lots of talk of a recession. Does that imply that inflation is gone? Does that imply that it's more of a stagflationary recession where commodity prices continue to be elevated with a contracting economy juxtaposed to it? What do you think? Do you think, or is it more or are we just going to be a purely inflationary
So first
economy?
of all, I have to give my little rant about the term stagflation. So it was widely believed, and this should have gone to the ash heap of history in the 1970s. It was widely believed that it was a trade-off between employment and inflation. And so to kill inflation, that you would kill some jobs, and to put people back to work, you had to suffer some inflation. And that's the so-called Phillips curve. The 1970s proved that you could have massively high inflation and massively high unemployment. So that whole theory should have gone to the ash heap of history as, okay, this is economic Lysenkoism. This is just absolute rubbish. But it didn't, and the term stagflation lives on. And anyways, I'm not a big fan of that particular term. I am, however, a fan of the economics work of John Baptiste Say and Say's law. Say's law says that the supply you bring to the market is the demand that you can bring to the market. Whatever you produce, whatever that's valued by the market, that to that degree, that's what you can demand from the market in return. And so the idea that we're going to kill demand somehow without killing supply is just a contradiction in terms, even before we get into the issue that, so the idea is, okay, if my neighbors are unemployed, of course, the unemployment isn't going to happen to me because I'm the goody two-shoes who's voting for this. I support the Fed and, killing jobs. It's going to be my neighbors who lose their jobs for the good of me going to the grocery store. I can now outcompete my unemployed neighbors, and therefore, groceries will be cheaper. That's sort of if you could put words to this, malevolent and pernicious idea, that would be the words. But we live in a really generous welfare state today. Is it really true that people eat less if they're unemployed? I don't think so. The welfare state will take care of everybody. So actually demand for, at least for groceries, isn't going down. Now, maybe the demand for, $60,000 F-150 Raptor pickup trucks, maybe the demand for that would go down a little bit if you render, a lot of blue collar workers unemployed, but certainly not groceries. So the idea is kind of pernicious. Number two, I think the mainstream theory that the Fed operates on, hiking interest rates to reduce inflation, they actually have it backwards, right? So every time interest rates go up, that means a liquidation of productive plant. Every time rates go down, that means everyone who's thinking about adding more plant to the margin, their business case clicks from red ink to black ink, and they'll build it. And so return on capital is closely tied to cost of capital. And return on capital, the only way for return on capital to go up is to destroy supply faster than, demand is falling when you do that, but supply must necessarily fall faster until return on capital is above, cost of capital, which is the interest rate. But beyond all of this, I just don't think there's any business demand for credit. It's those pesky people with those, that annoying response to incentives. If only we could just impose our macro equations on them, and that holds their demand for credit to be constant while we hike the cost of credit massively, then we could get our nice neat outcome that our macro textbook tells us we should be getting. But anyway, it doesn't work that way. And so I think the forces of gravity, I like to use an analogy of a black hole. So, physics tells us that, at least in theory, if you get closer and closer to a black hole, the gravity is increasing. As long as you stay outside this radius called the event horizon, in theory, it's possible to light your rocket motors and blast away and escape, and move away from the black hole. But once you get inside the event horizon, then it's inevitable that you collapse into the singularity in the center, which is supposedly a point. And anyways, without getting into the physics of that, I have some questions about that. But you take that as an analogy. I think the interest rate has long ago fallen inside the event horizon of the black hole zero. and there's no way out of it. And so to the extent that the central bank wants to play at fighting it, and I like to use an analogy. I grew up in upstate New York, and upstate New York had this combination of the winters were nice and cold, we had plenty of snow. Some days were warm and the snow would get wet, sort of wet and soft. And so it was great for forming snowballs that would really stick together. You could pack them nice. And then we also had plenty of hills where I grew up. And so it was, everybody had that idea, I guess you see it in the cartoons, to start pushing a snowball downhill, and the snowball will pick up size, because the snow is wet, and as the snowball is rolling around, it picks up more snow and it gets bigger and heavier. And for a while, it's frictional. You actually have to push it, otherwise it stops. But the combination of the snowball, of course, its mass is growing exponentially. Usually the top of the hill isn't that steep, but now you're getting to the steeper and steeper part, just where the snowball is getting heavier and heavier. There's a point at which you can still run along and hover your hands over it, but you're no longer in control. It is now going on its own. Its fate is going to be governed by gravity and whatever is at the bottom, which could be, your living room window, it could be a car, it could be, harmlessly dashed into a tree. But that's what's going to govern the fate of it. You're no longer, you can pretend for a while that you've got this thing, but you don't, because it's bigger than you are now, and it's picking up speed. And so the central banks, they want lower interest rates generally because the whole point is to let the government borrow more than its tax revenue so that it can buy more votes than otherwise could if it was operating purely on tax revenues. And they get to the point where the interest rate is falling out of control, and there's nothing they can do about it anymore. So I think every once in a while it's almost the protest move that they have to show that they're trying to fight it. Well, yeah, we can raise. It's like the drug addict. I can quit anytime I choose to. I can hike rates anytime I choose to. Well, every time you try, you trigger recessions and crowded events and crises and all these things. And this time is not different from all the previous times.
Yeah, and the thing is, whatever they do has a lag effect. So it's not like you do X and you automatically see Y. It's you do X, then a year later you see Y. So by the time you do X and Y occurs, it's already too late.
Or two or three lag. That's right. The lags are long and variable. And then things happen later, and people can pretend, oh, this wasn't caused by that or whatever. And so there's all these gyrations and all this apologizing. And at the end of the day, yeah, you caused a crisis. Now, it doesn't mean that I think they should just keep pushing interest rates down. I think we should have a free market, which means the gold standard, and gold has stable interest rates, not perpetually falling. But all I'm saying is, in the irredeemable currency system, the rate wants to fall, and you can't really stop it. It is what it is.
So what do you think will happen in the end? Like, do you think there's a default? Do you think we'll inflate our way out? They'll try to inflate their way out of the debt burden, or what do you think?
Well, inflation is the process of borrowing more, in my view. So sure, each dollar of debt that you owe is worth less, but you owe exponentially more of them. So it's kind of like you're in a hole. Can you dig your way deeper to get out? It's mechanically, physically possible. You're going in the wrong direction. No, I think in the end, right? So I wrote probably my single most important article, and everybody watching this should read it. It's called "When Gold Backwardation Becomes Permanent." And that's how I think the whole thing ends. People will call it hyperinflation, but nothing to do with the quantity. It has everything to do with the collapsing quality of the debt that's backing this whole thing. So the dollar will fail, but it will be last after all the other fiat currencies, which are, by the way, dollar derivatives anyways. The whole regime is failing, and one by one, Argentinian peso and Turkish lira and all these things failing, they're all going to end up dollarized. And then the whole thing fails. I've got to get on another call, so I apologize.
Yeah, no worries. Thanks for coming on, Keith. Anything you want to plug before we sign off?
Everybody should look at monetary metals. We pay a yield on gold, and that's the way out of this whole thing.
Awesome. Well, guys, thank you for watching. Be sure to like, subscribe, comment down below, and we will see you in the next episode. Bye, y'all.
All right, thanks so much.